please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Laurence, hi, good morning. The last time we spoke with you, you had indicated that the overall trend for the Nifty is still on the upside. Things have gone a bit awry over the last week or so. Do you get a sense that perhaps this uptrend or this theory of an uptrend will now be put to rest?
Well, it's still intact. You mentioned, or your colleague mentioned, the 20-day moving average. We're still above that. You're still above 50-day. You're still above 200-day. So if you're looking at simple trend definitions, Nifty's still in the uptrend. And to me, the 50-day moving average around the 10,659 area for Nifty is key. And as long as that remains intact, your immediate bias is to the upside. It's probably worth bearing in mind if you look at the Indian market in dollar terms relative to the broader emerging market index, you've actually broken the downtrend of underperformance since the 2016 highs. So while the rest of emerging markets sell off in relative terms, India's holding in there quite well.
Okay, Laurence, hi, good morning. I was looking at that the 50-day moving average 10,650, and also the last closing low on the Nifty was 10,590. You reckon if this range is broken for whatever reason, in that case, would the texture of the market completely reverse?
Well, it doesn't completely reverse. The big breakdown area where I think you can get outright bearish on the Nifty is essentially the lows that you made in April and December 2017 and April 2018, which sits sort of just below the 10,000 level. And as long as that's intact, you can call the Nifty in a broader trading range, and it really have to break below that 10,000 area to turn the outlook for the Nifty to an outright bearish one. That wouldn't be my base case, though.
Laurence, good morning. You earlier also had given a target of about 31,000 on the bank Nifty. Are you retaining that as well?
Yes. Yes, and again, I mean, if you look at Nifty banks, the uptrend is still there. We're still above the 50-day, and yeah, we have seen some hesitation at 27,000, which is just below the January highs. But even with this recent volatility, we haven't violated any of the short-term support areas or the longer-term support areas.
Okay. What about the other markets, Laurence? Because there's an increasing view now that a lot of money will be moving out of many emerging markets and into China. How is the Chinese market looking to you relative to other emerging markets?
Yeah, so essentially you can break China down into sort of three indices that capture different parts of the Chinese economy. So if you've got the MSCI China, which is essentially heavily weighted towards the China Internet names, which are US listed. Then you have the Hong Kong listed HSCI and HSI. Now those markets did break down yesterday with the Shanghai Composite. So it does look like the domestic China market is in store for further weakness. But if you take the MSCI China Index, which includes the China Internet ADRs, that's still holding within a range and still holds above its 200-day moving average. So you've got at least some relative outperformance from the MSCI China. But on the domestic side, it does look like we're set for further weakness there.
Laurence, if you're talking about the Nifty uptrend being intact, then within sectors, how are you looking at things? It's been a phenomenal, for instance, month for pharma. Does it look like some of these pharma stocks in India are making a durable bottom?
Yeah, so well, if you just take the Nifty Pharma Index, absolutely, it's been a sector that's underperformed for over 3 years, and we started to see signs of this basing out earlier this year where momentum was slowing to the downside. If you look at the index that retested those lows two months ago, you formed this double bottom pattern, so you've got a clear base in place now, and I do think the sector can continue to re-rate.
Okay. Laurence, what about this comparison between developed markets and emerging markets? Your thoughts on whether we are in for sustained outperformance of developed markets?
Yeah, so I think the key thing that we've seen of late is obviously dollar strength, and that's been negative on the emerging market side. What it has done is put the emerging market chart relative to the developed market chart back into the basing pattern that we saw develop between 2016 and 17. So we haven't seen an outright resumption of the downtrend of the 2010 highs, but we've seen a move back into the trading range that we saw between 2016 and 17. And this does suggest that we're likely to see a retest of the lows of that trading range, but it's only when we break below those lows would the DM trend of outperformance continue. Again, we think that from the longer-term trends is unlikely, but in the short term, EM underperformance looks like that continues.
Okay, so the EM underperformance would continue. What about the rupee, Laurence? You have written notes on, the way the weakness in the rupee has shaped up. Where do you see that going? And in that context, how do you sort of trade on the technology, the pharmaceutical stocks?
Yeah, so the key thing that we had highlighted on the rupee was the trading range that you formed between 2017 and 18 when we broke above 65.5 rupee. That gave us an upside target of 68, which we've essentially met. And if you look at our momentum indicators, momentum on the upside is now slowing. So our base case in the rupee here is that we've probably seen the worst. 68, 69 will be the top end of the range, and we'd look at support coming through at the 66.50. So I think the worst rupee weakness is behind us, and I'd look for the rupee starting to stabilize between 66.5 and 68.
Okay, that would certainly be...
patterns with preferred farmer.
Sorry, we were just losing the audio connection, but we have you back, Laurence. Please carry on.
Oh, yeah, so just on the sector side, the pharmaceutical sector would be the preferred play on the setup there over the technology side, which had a great run-up at the start of this year.
Okay. Laurence, a word on commodities. If you have tracked them off late, crude has been very volatile. You've seen a bit of a downplay off late in metals.
Yeah, so it is a mixed bag depending which commodity you look at. But we start off with oil being a big sort of impact on the Indian market. Is that what we'd been flagging on the oil or Brent setup was that momentum to the upside was slowing. We now have a short-term top in place that's formed below the $80 resistance area. And the setup is for oil to correct back to the 200-day moving average, which sits around $66. And our base case is for a trading range then to form between 66 and 88 and 80 dollars gain ahead, but immediate downside back to the 200-day at 66.
So you did mention at the start of the chat that the Nifty uptrend will remain intact as long as the 50-day moving average of 10,650 holds. What is the corresponding level for the Bank Nifty?
So it's very similar. If we look at the 50-day for the NSE banks, you're sitting at 25,930, call it.
Okay, so you expect the Bank Nifty to hold around these levels? I mean, it is sitting above 26,000 at the moment. How does the chart look for the rest of the year?
Again, we still have that 31,000 ultimate upside target, and we'd be looking at that 50-day holding the short-term pullbacks and the trend remaining to the upside.
Laurence, I don't know if you've had the chance to look at any of the individual Nifty components of late. Sort of some of the stocks that have helped us through this route is something like a Reliance Industries. I don't know if you have a view on that, if you could share some insights. And within the banks, there's been some sluggishness around an HDFC Bank, which is otherwise such a huge stock for the Indian market. Since you're positive overall on the uptrend, which are perhaps the constituents of the Nifty that look the strongest to you?
Yeah, I don't have those charts in front of me, so I can't comment on the individual stocks. I've only got sector views that I can comment on currently.
Yeah, but within sectors, fair enough. So we've spoken about pharma. Any other sectoral trend that emerges which might keep India on track with the higher side targets that you have on the Nifty?
Yeah, sure. So as we've said before, the key driver to our 12,000 upside target for Nifty remains the banks index. And obviously we've talked about the pharma side where we see the base forming that. We've touched on technology before, but I think a lot of the technology run is now behind us and would prefer that pharmaceutical side.
Right, Laurence, we'll leave it there. Thanks a lot for your time today this morning.